review Fed Day. We need to talk about existing home sales. And we need to talk about a housing market with 8% mortgages, folks. That and more to come in your daily financial news. Let's jump into it. It is September 21st. I forgot to write that down. Look at that. Not September 2nd, September 21st. Let's talk about Fed Day. First, I love it when a plan comes together. We got exactly what I was looking for. Frankly, even better, we got what I was hoping for. We got the pause that we've been talking about for well over a month that many people disagreed with, but we got the pause. Second, we got the hawkish of all hawkish answers, right? The velociraptor of hawkish. So much so that the 10-year note jumped yesterday and is jumping again this morning. Also, I got a call from a mortgage broker that I know saying, Michael, 750 credit score, 10% down, owner occupied, the par rate has an 8 handle on it. Yes, folks, the Fed did their job. The Fed has successfully removed those 4 rate cuts that Taylor has been telling us about. I think right now we are down to 2, maybe 2.5 next year. But let's get into what really happened. Because what finally happened is what I've been hoping Jerome Powell was going to do. He basically said, I'm going to break something. Jerome Powell was explicitly asked about a soft landing. And his answer was, I want to make sure I get it correct, a soft landing is still possible, but is not our base case. Now, I believe this is all theater. This is all the Fed puffing up their chest. This is all the Fed, trying to scare the market. This is the Fed using their voice to cause a reaction. And boy, is it working. So if you look at the dot plot, there's so much in the dot plot. That is where the money is going to be made. 7 of the 19 said, we're done here. No more raising. Terminal rate locked in. 12 said they see at least one more coming this year. That is it. That is where all the votes are. We're either done or one more in 2023. I, again, think they're done. This is all theater. We have so many headwinds right in front of us that there's no chance, in my humble opinion, that they raise again this year. Second, you know that I currently believe that they are going to be on hold all of next year. No rate cuts in 24. If you look at what their dot plot is saying, it is pretty close to that as well, although I think the average makes the first cut sometime in Q4. Higher for longer is here. I believe we are at the high mark. I believe their goal, their hope, it's really their hope. They hope they can hold all of next year. Because if they cut, it's because something nasty broke. And believe me, with where rates are going now, something in the banking system, something in the commercial mortgage-backed securities, something out there could be breaking with the jump in the 10-year this morning. Other things that I noticed is the GDP. The economy is strong. The economy is much stronger than expected. I believe that is true about Q3. Q3, I believe we can all agree that Q3 will be stronger than we all expected. I believe Q4, not so much. We'll talk more about that later. Next, unemployment. They lowered their expectation for unemployment. It's now in the low 4s versus the mid 4s. So better growth, better employment. And oh, by the way, did you see the shocking weekly unemployment report this morning? Remember, we get the weekly unemployment report every Thursday morning. Folks, it's 201,000. It's down 20,000 from last week, which was down 15,000 from the week before. The job market is still strong. I mean, this is the number. The weekly number is the one that would give us the first indication. And right now, it's going the other direction. I believe with the strong weekly number is why the 10-year note jumped this morning. They're like, damn, I guess we need more. But again, I think it is theater. I think the headwinds that are about to smack us in October, which we'll talk about in a minute, are coming. Let's see, what else? Yeah. So again, Powell is on record now that he thinks a soft landing is possible, but it is not his base case. Again, I don't believe that. I think he is trying to tell a story, trying to act tough, trying to be tough, trying to be Paul Volcker. That, man, I don't care, not my job, I'm going to break something. I don't think he wants to break something. But I think he has to put on that aura of being that guy. And then again, if the market believes that he is that guy, it will act accordingly, and then he doesn't have to be that guy. So I believe that's the kind of give and take that we are in. So at the end of the day, I don't think the Fed raises again this year. We'll see. Oil prices are a little wrinkle in all of that. And again, I'm standing tall with, I think they will hold. They will try to do something they have never done before. I realize making a call on something they've never done before is very, very risky. The longest pause they've had in my memory is 11 months, and I'm really calling for like 16 or 17 months. So we are going to see. So Fed Day, the dot plot we kind of already talked about. Better growth, less unemployment, inflation stickier for longer, terminal rate higher for longer. The Fed really yesterday, what the Fed's goal, my opinion, yesterday is they wanted to get the market to stop pricing in for rate cuts. I can't wait to talk to Taylor on Monday because we're going to ask how many of those got removed. I think 2 of them are in the process of being removed right now, but we will know for sure on Monday. So again, we are here. It's going to be very interesting to see what's going on. We also now have 8% mortgage rates, which we will talk about. So again, the 10-year is up this morning. It was up like 0.8% or 8 basis points yesterday. This morning it was up another 11. It feels like with some of these movements that there's something in the background that you and I aren't really seeing. So it will be very interesting to see what happens over the next 48 hours and into the weekend. Folks are chasing that yield. Again, I think people are removing cuts from next year. And now we're certainly going to have an 8% mortgage rate. The question is how long? The question is how long? The very interesting thing is, as we have walked up this interest rate curve, I think you and I have seen a couple of things. First, we saw the market crumble last year in July and August when it hit 6. It then rebaselined at 6. Then it's starting to crumble right now at 7. Well, you know what? Now we got to 8. 8's a big number. 8's a big number, especially in the winter. Where are transactions going to go? We just saw last month, I think it was reported last week, 15.6%, let's round it to 16%. 16% of pendings were canceled. If you're in escrow right now and you did not rate lock, are you really going to close? I mean, your rate might be up 0.5 point, might be up 0.75 point. The market's going to get slow. But, this is always a but in housing, remember, the higher rates also reduce supply. Now, as we've learned earlier in the week from the uneducated economist, the 8% mortgage rate is not only going to slow existing homes, but builders will just not build. And when a builder decides not to build, you got to remember that's a unit coming off the market in 6 months. So if we create an air pocket in new builds of say 90 days, what does that mean for next year. This supply picture is so greatly misunderstood and was missed by so many. Everybody looks at housing as demand and affordability, which is record low, and I will say will be the worst ever. You've heard me for a long time talk about 1981 being worse. I believe with rates going over 8%, it will be the worst ever right now. Right now. So that means a lot of people won't buy. Some people will trade down, right? They'll go, hey, we can't afford the home. We'll buy the condo. We'll buy the townhouse. They'll just rent. They'll stay with their parents. It's going to be a very interesting winter. And lastly, remember, if you are a seller in the winter and rates are 8%, I think it is very key to understand you're likely a motivated seller. You need to sell. So if you follow what we do here at One Rental at a Time, you were doing your work, you're watching Days on Market, and you were writing disrespectful offers. I have said many times, and I believe, I do not care if the cost of capital is 10%, 12%, 14%. I will write offers that make sense for me. If the seller doesn't like it, I don't care. They can say no. But you know what? Sometimes you're the only game in town and they have to say yes. Folks, write the disrespectful offers. Write the numbers that make sense for you. Don't overpay. Don't chase. Don't get into bidding wars. Follow up. When you're writing disrespectful offers, you will likely get a no the first time. The third time you follow up, you might get a maybe. Maybe it's the fifth or sixth time you'll get a yes. I've been doing this a long time. I like a slower market. I like finding motivated sellers. It is that simple. In this next 3 to 6 months, if they're truly selling, they are motivated. Existing home sales. So we got existing home sales a minute ago. I have not read the full report because they came out at 7 o'clock a.m. and I start this at about 7:03 or something like that. It looks like existing home sales came in at 4.04 million. That's still above the cycle low of 4.02 million. I had expected 3.85, so I missed. I was way off on the scale of things. We are down from last month's 4.07, and we are down from the expectation of 4.1. Folks, next month, right? So we're going to get the September data in October, like October 20th. I have to imagine we are going sub 4 million. We're going to set a cycle low with September. You got 8% mortgages, you have 15% cancellations, you got builders pulling back. It's just all this stuff going on in the housing market. Transactions are going lower. They're going to set a cycle low, in my opinion. I don't know if you guys ever checked out where I used to work, but there was a company called Splunk. They did security and data management, or all that nonsense. Well, they just got acquired by Cisco Systems for $28 billion. It's funny, when I was working there 7 years ago or whatever it was always rumored that Cisco would buy us. It was always internal chatter, and it looks like 7 years later, it actually happened. So if any of the guys are out there that still work at Splunk, congratulations. You're now part of Cisco Systems. Cash those shares, and I bet most of you bounce and you leave, but that's just how it works. All right, more hikes and some challenges. So after Powell came out and spoke, we got word from Jamie Dimon. Jamie Dimon thinks more hikes are coming because of oil. Roger Ferguson thinks that there's not only one more hike, but 2 more hikes coming. Jeffrey Gundlach is out talking about more hikes coming. Folks, this is the Fed doing their job. If the Fed got Jeffrey Gundlach, Jamie Dimon, and Roger Ferguson all to talk about not only one, but multiple rate hikes, They are doing their job. The market will react, the market will reset, and lo and behold, they don't have to do anything. We shall see. Excuse me. At the end of the day, lastly, we have this amazing event happening in Las Vegas on February 17th and 18th. We sold 5 more tickets yesterday. Yes, VIP is sold out. General admission is $199. Trust me, you want to be here. You want to be here with your significant other. You're going to be talking about, we're going to be focused on the full-time employee. How can you start building, collecting assets? How can you build a side hustle? How can you talk about money and relationships and all of those things? We'll do some stocks, some side hustles, and of course, a bunch of real estate. And we already announced that the Uneducated Economist yesterday will be making a guest appearance. And more surprises and announcements are coming. Go ahead, book your tickets. This will sell out. General admission is $199. You're going to get at least 11, now 12 speakers. You're going to get 20 some odd hours of content. You're going to get a party. You're even going to get a concert in your ticket admission. So 2 days, Saturday, Sunday, President's Day weekend. So it will make your Monday travel much easier because you don't have to work on Monday. All right, folks, take care. Bye.